Welcome back to U.S. Farm Report this weekend. Matt Bennett and Arlan Suderman, dynamic duo to talk markets this weekend because we have quite a bit to discuss, including USDA releasing the July WASDE report on Friday. Matt, there wasn't any change to yield, the national yield estimate. Was that expected?
In all honesty, it's kind of rare for them to go there. And so whenever you look at, crop condition ratings, certainly there's reason to believe that, they could have made a change and, people probably would have accepted it. But still, I believe the 94 was the last time that we actually saw that happen. And so, I wasn't necessarily surprised. I think with the report, the main thing for me is just to see, demand continues to be quite strong. I mean, you look at world carryout numbers, you look at U.S. carryout numbers, everything was below expectations. Typically, a report that was versus expectations as it was today, you would have seen some sort of a rally, and that's not what we got. It was more the same.
Yeah, Arlan, we just cannot get a rally in these grain markets. So what were some of the changes, though, that we do need to note? I know they made changes to Brazil, made some changes to demand like Matt talked about, but what were the biggest changes for you?
Yeah, and I think the market response was because the funds expect bigger supplies coming both from the United States and from Brazil. There's a lot of water under the bridge yet to go before we know what the U.S. yield is going to be. But Brazil is harvesting. They're well into the harvest. The yields are very good. And I talked to our Brazil team earlier today, and they said that the production estimates are likely to go up significantly. Yet we've got the highest estimate in the industry. And the private industry down there has much higher estimates than what we do. So even talking as much as another 10 to maybe even 15 million metric tons. Now, the top end of that's probably overdoing it. But let's say it's 10 million metric tons above where USDA is currently at. That's 400 million bushels of extra exportable supplies that would directly impact U.S. new crop exports going forward. We did get the big bump in exports for the current year, offset by a reduction in feed usage. We're feeding a lot more cattle in Mexico since we can't bring them north. And there's the same number of cattle being fed, it's just that they're south of the border instead of north of the border.
Matt, Arlan's talking about we could see the corn estimate in Brazil go higher. So big crops there. And we're talking big crops here in the U.S. I know some argue it's too early to talk national yield estimate for corn, but that is what the market is focused on at this point, Matt. So what yield do you think the market is trading right now?
Yeah, I think the market is certainly trading something above a 181. I mean, if you would actually want to look at a 181 with the U.S. balance sheet, the 166 that we got today clearly is a very tight situation versus what the size of the crop that we're raising. I mean, you look at old crop balance sheet at 134. I mean, certainly a sub 10% stocks to use is typically not going to mean that you're taking this market lower over the last several weeks, but clearly the market's been focused on a big Brazilian crop, as Arlan talked about. They're focusing on big acres here in the U.S. But one thing I'd point out is over the course of this 2-year marketing window, if you look at the USDA report, we're essentially drawing down world stocks 43 million tons. So, I'm with Arlan. I mean, if you take the Brazil crop up 10 million tons, that's a big deal. But at the same time, over the course of these 2 marketing years, we're not raising near as much corn as what we're using. So in the grand scheme of things, this demand is a real feather in our cap moving forward.
We still have much of the growing season to go. But Arlan, looking at a big crop in South America, looking at a big crop here, we can argue how high this national yield will go. What is it going to take to rally this corn market? What do we need to happen?
Well, I think a couple of things. One, if weather would start to become a problem, some indications we may see some pollination issues out there in the Midwest. Weather could certainly finally turn warm and dry as it has each of the last recent years and take some of the top off this crop. And the other thing is, do we get a blockbuster trade agreement somewhere that really increases demand? Overall, cheap prices do create demand. That's the pattern that we're in. Cheap prices are building that demand. The world is pretty comfortable with just-in-time supplies. The question is, when will that be threatened? As long as it's not threatened, the market's pretty comfortable with cheap prices to keep that demand going. If it gets threatened, all of a sudden, they want to get out of their short positions and start worrying about making sure there's enough supply for it.
Well, we thought we could see new trade deals announced this week. That didn't happen. We're going to talk much more about the markets when we come back.